The Bitcoin weekly multi-year view right now, it does not get any more bullish looking from a structural standpoint. But here's where things get interesting. And we're going to talk about the zoomed in structure of Bitcoin, what might be next for a short-term price. In November 2021, the Federal Reserve was still engaged in quantitative easing, but it was the beginning of the end of that era. On November 3rd, 2021, the Fed officially announced the start of tapering quantitative easing beginning mid-November. That's not bullish, that taking place. If we go to the Fed balance sheet at that time, November 2021, you can see the expansion of the Fed balance sheet getting ready to top out. We're going to get ready to go into this contraction phase. Right now, the exact flip side of that is happening. Quantitative tightening is about to be tapered, and we are about to go into an expansion phase. That is a bull market phase. The Bitcoin and crypto bull market, it seems, because Bitcoin is hovering above all-time highs, it seems it might be coming to some type of end. But the very opposite could be true. And in this video, I want to discuss that on the weekly. I want to dive into the Bitcoin price on the shorter-term daily chart, because the structure that we have on the shorter-term daily chart, interestingly enough, looks exactly like the structure we have on the weekly. So hit the subscribe, hit the like on the way in. If you're not in our intelligence system, check out the sale we have going on right now in the link below, 40% off, some powerful tools back there. We're actually going to use a couple of them in this video. This is Bitcoin on the weekly. I want to start here from a structural perspective, just a reminder of what we've been tracking, the inverse head and shoulders, which, by the way, goes back to the area we were just discussing, November 2021. I brought that up because many people are kind of like, we're there. We're at the second top of this bull market, and we're about to enter a bear market. And I wanted to bring up the Fed policy pivot and everything going on with quantitative tightening versus quantitative easing, because we are in an exact opposite side of the spectrum right now. So we are in this environment where, if we draw a line right here, and I don't know exactly where, but quantitative tightening, which is what we've been in, is going to start kind of tapering off. Right here, quantitative tightening was about to start beginning. And this is what really is one thing that led to the crypto bear market last cycle. Now we have the opposite happening. And I think that's incredibly important, especially as the Bitcoin chart kind of just revisited this neckline on the weekly, and we're just trending upwards, this trend of higher highs and higher lows. But in terms of short-term price, I want to kind of talk about what short-term price to the downside could look like and what it could look like to the upside, because we have very helpful structure playing out on the Bitcoin daily chart. Before I do that, to play into this macro view of bull markets, bear markets, there's a couple things I noticed as I was kind of setting up a video today, and two of our on-chain metrics indicators over here in the intelligence system. So this first chart I want to look at is reserve risk, right? And if I'm looking at this, reserve risk measures investor confidence in holding Bitcoin long-term. When confidence is high, prices are low. That's buying time. When confidence wavers, prices peak. That's selling time. Our buy signal tells you exactly how this conviction shifts. So there's a lot to talk about in context to this chart. We have our risk heat map overlay on this on-chain metrics chart. So I want to use that. The one perspective I want to take, because there's so many different perspectives you can use with on-chain, I wanted to show you something. If you just look at kind of coming out of this bear market, how Bitcoin's been operating on this chart, truly different than any other cycle. But if we look at even last bull cycle, and we can get a sense of, here's Bitcoin going to all-time high back here and the bull market highs back here. Look at how this entire on-chain visualization metric was operating. Completely different than what we're looking at right now in terms of just the consolidation, the opportunity, the risk scores, everything that's taking place this time around. But what I really wanted to point to your attention was, if it's like anything, it is similar to the 2017 bull run. If we kind of zoom in, you can just see the consistent consolidations of Bitcoin on this metric. And what I found interesting was, if we even just look at this area, right? Bitcoin, June 2017, August 2017, and we actually go look at Bitcoin in that time, Bitcoin was doing what it's doing right now as well. That is hovering above all-time high and kind of dipping to key areas, key support. In that range, it was 20-week moving average, that green line. This time around, it's even more healthy consolidation. Notice how long and drawn out these consolidations are. We are being pulled into the 50-week moving average, 50-week moving average, and it's taking months. And right now, maybe this happens again. All the while, if you go back to reserve risk, you can just see the consolidation so healthy. The other thing is MVRV Z-score, very similar. Let me explain this very quickly. This compares Bitcoin's current price to what everyone paid for their coins on average. It measures how far away the current price is from this average price using standard deviations. To put it simply, think of it like this. If everyone bought Bitcoin at an average price of $30,000 and it's now trading at $50,000, the Z-score shows how much of an overprice that is. And so this chart is incredibly helpful to kind of get a sense of, man, Bitcoin is way overpriced. And there's one thing that I can tell you just glancing at this, and you see it. Bitcoin this cycle does not seem to have been overpriced. And I think this is where a lot of confidence comes from, especially like Bitcoin maximalists or people that have been in the industry like from the very beginning. They're just like, Bitcoin at 100,000, it's great, but it's going way higher. This is where you get these price targets of $1 million plus. And I'm not necessarily just saying this cycle, right? But even higher price targets in the 150, 200, 300 range for this cycle, this is where this is kind of becoming a potential reality. Because in terms of Bitcoin being overpriced, this chart is saying it's really not that overpriced. But what I wanted to point out to your attention, again, completely different looking chart than last bull market, in the bull market highs even, but a little bit more similar to 2017 bull run. Swing high, back down, swing high, back down, swing high, back down, swing high, back down, right? All through that bull market of higher highs and higher lows. Right now, this is even healthier looking. Swing high, multi-month, back down. Swing high, multi-month, back down. Swing high. The leveling out of this space and Bitcoin right now, as we're getting ready to go into this new era of, I don't want to say quantitative easing. We don't know exactly when that will happen, but the tapering down of quantitative tightening. Again, looking at this shift that might be taking place, and we start going into quantitative easing on this balance sheet. This is getting powerful as far as the setup goes on the macro. Let me discuss the short-term Bitcoin on the daily. Let's take a really quick look at this clip. This is from 11 days ago. Check it out. So what I'd be watching for is potential resistance here. Maybe this daily candle just stalls out right now. Maybe it goes to 110,000. People are like, this is it, game on, and then it stalls out. Either way, we could have a resistance area here, and we have a very nice structural setup for a potential inverse head and shoulder. So if we fail here, Bitcoin starts coming back down, maybe as we get to. So this is where we are right now. And there are multiple things to track here now. So we did go a little higher, right? And you can just see that swing high so far at the potential neckline. I don't want to call this a confirmed inverse head and shoulders yet, but we've gotten resistance. And the thing also that's in play here is this 50-day moving average crossing above the 200, that red line. This is a move that just happened back here. And this was after tons of consolidation, if you remember. But this 50-day crossing above the 200, look what Bitcoin was doing. Very volatile in that move, right? Coming back down in between the 20 and the 50. Right now, we are below the 20, above the 50. There's continued downside in play. Let's keep an eye on that. We want to monitor if Bitcoin can get back above this 20, around 106.5 or so. And if it does, that could be a signal for the short term that the bulls might actually, make another move to the upside. But if this keeps trickling down, there are areas to watch for. And this is something I want to discuss. If it keeps trickling down, we have obviously the 50-day at 99. The 200-day is at 94, 95. That's that first range we want to keep an eye on. This would set up some very nice looking structure for Bitcoin's inverse head and shoulders that we're speculating about. But I don't want to stop there. And I really want to plot, this is what I usually call like some type of fail-safe support. Swing low to swing high from that, this was the beginning of April swing low. We have a higher low Fibonacci down here, and that is 88,000 to 82,000. This, in my view, it is in play. This is an area, if Bitcoin were to start falling, I think we'd have to probably be seeing something in regards to some type of event that is a high fear event, maybe similar to the tariffs, the tariff fear. But if Bitcoin gets to that area, I think the way in which even on-chain metrics will be consolidating, and we can do that in a different video, will be exceptionally healthy, similar to what we've already been seeing. But that's if Bitcoin were to even get to that area. The first area right now is really kind of what we saw happen back here between the 20 and 50, right? So let's see what Bitcoin does in the short term at this area. And again, the 50 moving average is around 99,000. Maybe we wick into the 90s, and then we're making a move back to this neckline, and we do have an inverse head and shoulders in play. Even right now, I mean, if Bitcoin were to start breaking up, we can kind of see as a very small right shoulder. That could be indicative of the bulls just having a lot of control. But I'm going to just continue monitoring this entire setup. Meaning, can Bitcoin break above the 20, right? Around 106.5? Or can it show support above the 50, around 99? Bitcoin might just need to hobble around in here for a little bit. And I don't know, maybe there's a catalyst, something that happens with the Fed or Jerome Powell or whatever. Maybe it just kind of ticks Bitcoin in either direction. That's something I'll be watching on the short term. But either way, interesting to see the setup potentially in play right now in the daily, and just how similar it looks like to the setup on the weekly, which in my view is such a bullish macro setup, not just for Bitcoin, but for crypto. And as we enter and wait for this new phase of Fed monetary policy, I think things are looking better than worse. So these are my thoughts today. I hope you're having a good start to your week. Please hit the subscribe, hit the like, check out our intelligence system, hit the link below, 40% off right now. And I'll see you in the next video. God bless.